Bring on board Dilip Bhat, Joint MD at Prabhudas Lilladher. Dilip, hi, good morning. We're just chatting with Nishal Maheshwari from Edelweiss, and he believes that, pharmaceutical is best avoided right now. Look at the related space, hospitals, healthcare, diagnostics. Is that an opinion that you also share? Because it's just getting so grey an area with regards to permissions and, observations coming in from the UK MHRA as well as the US FDA almost on a daily basis now.
Good morning to you, Aisha and Nikunj. I think I would agree with Nishchal on that. As far as the healthcare is concerned, I think that's one which is much more predictable, much more visible and much more sustainable, and without any too much of ifs and buts in that particular sector. And we probably will continue to see some good headline growth for next couple of years. So whether it is Dr. Lal's or whether it is ThyroCare, and ThyroCare is something which we have been recommending. Both of them are very expensive, but without any doubt, I think if you were to take a slightly 2 to 3 year horizon and the kind of growth that they are talking about, I think they look good. Coming to the main pharma companies, I think my broad take still is that, this US FDA is certainly something which everybody is now have to live with it. But I feel that this particular thing will actually help differentiate between the good and the bad. US FDA, when it happens, in a sense, I think it's very good. The learning, I would really take it in a slightly more positive way, that companies will realize their follies and then they will strive not to repeat those mistakes. So that is what will differentiate between the good companies who learn very quickly and avoid those mistakes. Maybe some of the companies will repeatedly get that and possibly they will get derated. So I wouldn't be too worried about those US FDA warnings. And I would still think that the pharma companies, especially the US directed, I think they are all going to, a lot of them are going to do pretty well. So I think Sun Pharma is something which is what we would like. Glenmark is another company, something that we will also really go for at the moment. So this is what broadly I think is about the pharma companies.
Dilip, coming on autos, and I'm going to keep two-wheelers aside. The four-wheelers are rocking. Maruti dispatch numbers were not bad. Mahindra and Mahindra numbers are decent. Escorts, courtesy, good showing. The dispatch numbers again, our sales numbers have been decent. Do you think there is money to be made in 2017 in a Maruti or a Mahindra and Mahindra, for that matter, Escorts?
Very much, Nikunj. I think Maruti, Mahindra and Mahindra, probably they are taking it on the chin because some of the numbers have not been so very good, and they have been benefiting mainly because they are having a waiting period for some of their cars, which is what they are pushing at the moment, whereas the conventional and the regular car sales have been down, and same goes true even for Mahindras. So I would say that yes, Maruti is without any doubt, Nikunj, that anybody who wants to build a portfolio in India, Maruti becomes a part of the core portfolio, and not just because it's one of those blue chips, but also because it has a good prospects. So I would say yes, within the four-wheeler pack, I would go for something like Maruti, Mahindras, and Tata Motors. I think all these three are something where you should really keep a watch, and at every dip, I think they would still become a good buy for a slightly medium to longer term.
Dilip, let me very quickly get a sense on flows. Now, 2017 could be another bumper year for domestic flows, and I think there is evidence of that. DIF flows, SIP money, that's strong. But I worry about the FI selling. More than 20% of the free float of Nifty is currently owned by institutional investors or foreign institutional investors. So for me, they are real owners. And if the real owners are panicking, it could have a collateral price damage.
Nikunj, I completely agree with you. I'm absolutely on the same page as you on that. I think we have always seen in the past also that the FII outflow really causes the markets to hit the speed breakers. And if it is not supported or complemented by this huge domestic inflow, the markets possibly would have seen some serious correction. But as what we all know, that the mutual fund flow continues to be good and it's only going to improve, even considering that the demonetization step that the government has taken, which is going to be very good for economy and even for the markets in the long run. So I think that is really helping the markets at the moment in avoiding any serious corrections. At the same time, I think, Nikunj, one more factor is that prices are significantly ahead of the valuations even at the moment. And now for the third consecutive year after the new government has taken, we find that the earnings have still not gone anywhere and there's still downgrade in the earnings. So I think that is something which also will be very keenly watched, whether 17-18, whether the earnings finally will return back in a big way and we are going to see a healthy double-digit growth in earnings, which will actually instill a lot of confidence if the markets have to really go forward in a very serious way.
Let me get closing comments from you. Do you agree with my assessment? It's not going to be an easy year to call, and market return would be a function of evidence rather than hope and belief.
Absolutely. I think I completely agree with you, Nikunj, on that. Just one more observation, that maybe sometime we may see a pre-budget rally sometime really seeping in, and I think that would be largely a function of hopes that we'll see some serious tax cuts, because this is the talk that we have been hearing quite a bit, that the tax will have to be rationalized or maybe they will have to be cut. More so against the backdrop of the fact that Trump is going to reduce the taxes is what the broad expectation is. But once again, the question will be how sustainable this rally will be and how quickly the economic recovery is going to happen. So I think amidst all that, we probably will see some volatility in the markets without any doubt, and that possibly will continue for some time to come.
Yeah, that seems to be the game, volatility, although off late in about the last fortnight or so, it's gotten extremely narrow. So it's choppy, but in a very, very narrow band, at least the index. But Dilip, great speaking with you as always. Thanks much for taking the time out and joining in today.
Always a pleasure to talk to you all.
Thank you. Okay, that's the word coming in from Dilip Bhat from Prabhudas Lilladher.